Hey everyone, welcome back to Corporate Decoder, the place where we untangle the messy world of corporate filings. Today we're diving into a report that promises a glimpse into exotic markets. Let's see if it's a thrilling adventure or a financial mirage. This report is all about MFS Series Trust IV and its Emerging Markets Equity Fund and a few other funds in its umbrella. We'll look at how they're doing in those risky but potentially rewarding economies. First, let's decode the MFS Blended Research Emerging Markets Equity Fund. This fund invests in companies located in countries like China, Taiwan, India, and South Korea. It's like a global treasure hunt for promising businesses, but with real money on the line. The report covers September of 2024 to February of 2025. For the Class A shares, if you had a hypothetical $10,000 investment, it would have cost you $62 in fees during that period, which works out to an annualized rate of 1.24%. Class B and C shares would have nearly double that amount, so be aware of those fees. They held 135 different investments and their portfolio turnover rate was 26%. Think of turnover as how actively they're swapping out investments. A rate of 26% suggests they are holding on to their investments. Looking at how the fund is invested, a whopping 99.2% is in equity stocks, while the remaining 0.8% is in money market funds, basically cash. Digging into which countries the fund is betting on, China takes the top spot with 30.8% of the investments. Taiwan is second with 17.3%, and India follows with 14.3%. It shows that the fund is heavily concentrated in Asia. Next, we'll look at the MFS Blended Research International Equity Fund. This fund invests in companies all over the world, but not in the United States, unlike the previous one. For Class A shares, the cost on a hypothetical $10,000 investment was $45 or 0.89% annualized. The same story here, however, Classes B and C are much more expensive. This fund had 151 holdings with a portfolio turnover rate of 24%, not too different than the emerging markets one. Again, almost all of it is in stocks with 98.2% in equities and just 1.8% in money market funds. Looking at the country breakdown, Japan leads the way at 14.3%, followed by France at 10.5%, and the United Kingdom at 9.4%. Now, let's analyze the MFS Global New Discovery Fund. This fund invests in companies that the managers believe are in their early stages of growth, so they're betting on smaller companies. Here for Class A shares, a $10,000 investment would have cost $62, equivalent to an annualized rate of 1.24%. They have a smaller, more focused portfolio of 100 holdings and a low turnover rate of 18%, suggesting a long-term investment strategy. Again, the same recipe of almost all stocks with 97.9% in equities and the rest in money market funds. This fund is very domestic, putting 53% of its assets in the United States. Japan is a distant second at 8.7%, followed by the United Kingdom at 8.7%. The SEC requires a complete list of every security that the fund owns. Here you can see the name of the company, the amount owned, and the value. Keep in mind that value changes constantly with the market. It is very raw data. Now, this item is for when there are disagreements or problems with the accounting firm that audits the fund. Here it says there is nothing to report, so it's a good sign. This part just indicates there haven't been any major changes in how shareholders suggest people to be on the board. Think of it as standard procedure. Finally, there's a confirmation that everything is on the up and up with how they report information and that there were no funny business changes in internal controls related to the report during this period. These funds are managed and the managers earn money, and they explain everything in this section as to their fees and costs. Nothing too crazy here, so you don't have to worry. This is a reminder that when the fund uses derivatives, they don't count them as part of the normal holdings. Think of derivatives as side bets. Also, keep in mind that this does not mean those were not factored into the overall analysis. Now, let's pull back and look at the big picture. For the Emerging Markets Fund, be aware of risks tied to Chinese governmental policies in Asian markets. The International Equity Fund is a bit more diverse, making it slightly less prone to huge swings related to one specific region. And the Global New Discovery Fund is betting big on America. All three are under MFS, so they are likely correlated because they use a similar methodology and team. So far as the financials, the high expense ratios with lower returns is a bit concerning. So here's my take. If you like these funds approach and want a piece of these specific markets, MFS might be for you. But always keep a close eye on those expense ratios and make sure the strat do not miss new corporate decoder videos.